Hello, everyone, and welcome to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. So, we are entering the 2016 opening of our trading day in the US stock market. And before that, I want to look back on our hypothetical portfolio for our 401k. So if you've got a 401k or a 403b or such a financial instrument, here is a hypothetical portfolio that you could follow. So I've got a mixture of stocks and bonds, and we're going with the larger mutual funds rather than individual stocks. Individual stocks are much too complicated for the average investor to really be financially safe with in the long term. So a fund is going to work out better because they are diversified. To further protect our assets, we are going to have a portfolio of stocks and bonds. So of course, bonds for more stable income, and stocks for growth of our capital. So here are three funds that I recommend, and I usually recommend the Vanguard funds, although you can of course go with whatever other organization you'd like, BlackRock, T. Rowe Price, etc., etc. But here's the ones I like. For bonds, I'm going with VBTLX, Vanguard Total Bond Market Index Fund, Total US Bond Market Index Fund. Last price on that was $10.64 a share. Then for the common stocks, I've got VITSX, which is Vanguard Total Stock Market Index Fund. Institutional shares. So these are US stocks. This is a very good total US fund. And then we've got VTMNX, which is Vanguard Developed Markets Index Fund, institutional shares. So these are basically this is basically the global stock basket, excluding the US, so developed markets. Actually, I don't think it's excluding US. We can look that up. But we've got focus on bonds, US stocks, international stocks. US stocks is $50.80 per share, and international is $11.83. So on the one-day change, a little bit of a drop. As we know, bonds usually rise when stocks fall, and vice versa. We are going to look at holdings. I like to use seekingalpha.com to keep track of portfolios and look up data. But here's our hypothetical 401k, one share of each. But if this were a real portfolio, I would be allocating about 80% stocks and 20% bonds. So 80% VTMNX and VITSX and 20% VBTLX. So 20% bonds, 80% stocks, one share. If we held on to these funds for 1 year from the first trading day of 2015, which was January 4th or so for these funds, if we held on to them for 1 year, we would have seen that since purchase, we actually have a gain of 14 cents for VITSX, which is the total US stock market fund. We had a drop of 5 cents for global markets, and we had a drop of 29 cents for US bonds. So 20 cents net loss for holding on to these for 1 year, about 0.27%. This, of course, doesn't include dividends. our dividend yield. So this is just hard monetary values. But I wanted to take a look at the performance of these funds on day 0 of the 2016 stock market, US stock market trading. So as the year progresses, we'll be checking in on our hypothetical 401k. We'll see how we're doing, and maybe 2016 will be a better year than 2015. So this has been Victor Campos for the VMC Inc. Financial News Network. Let's see how 2016 goes.